Plenary Session 1 with its theme Microfinance in India, Transforming Lives and Charting the Path Ahead. Once again, requesting everyone present in the hall to be seated with their electronic gadgets on silent mode. Please put your hands together as I invite on stage the moderator of the session, Professor M.S. Sriram, who is the Professor IIM Bangalore. Very warm welcome to you, sir. Please put your hands together as we welcome on the dais the moderator of the session, who is the Professor IIM Bangalore, Professor M.S. Sriram. Very warm welcome to you, sir. May we also invite the distinguished speakers of this session onto the stage. I invite on stage MD and CEO, Bandhan Bank, Mr. Chandra Shekhar Ghosh. Very warm welcome to you, sir. May I also invite on stage Professor and Dean of Faculties, Indira Gandhi Institute of Development Research, Dr. Subrata Sarkar. Very warm welcome to you, sir. I also invite on stage CEO Muthoot Microfin, Mr. Sadaf Sayeed, to kindly join us onto the stage. Very warm welcome to you, sir. We also invite on stage MD and CEO and CIO, Satya MicroCapital Limited, Mr. Vivek Tiwari. Very warm welcome to you, Mr. Vivek Tiwari. May we also invite on stage the Head Inclusive Banking Group in IndusInd Bank, Mr. Srinivas, Bonam. Very warm welcome to all our speakers. Before I request the moderator of the session, I request everyone present in the hall to be seated. Ladies and gentlemen, we have been joined by our distinguished speakers of the session, Mr. Chandra Shekhar Ghosh, Dr. Subrata Sarkar, we also invite onto the stage Founding Director, MD and CEO, Utkarsh Small Finance Bank, Mr. Govind Singh. We also have been joined by the CEO, Muthoot Microfin, Mr. Sadaf Sayeed. We also invite onto the stage Mr. MD and CEO of Satya MicroCapital Limited, Mr. Vivek Tiwari. We are also being joined by Head Inclusive Banking Group, IndusInd Bank, Mr. Srinivas, Bonam. With those, may I request our moderator to take over, but before I do so, may I say a few words about you, sir. Ladies and gentlemen, the moderator of the session, Professor M.S. Sriram, Professor from IIM Bangalore. Professor M.S. Sriram is, as I mentioned, is currently the Professor at the Center for Public Policy, Indian Institute of Management, Bangalore. In addition to his academic work, he has been active in the policy space, chairing the Expert Committee on Kerala Cooperative Bank, being a member on the Financial Inclusion Advisory Committee of the RBI and External Advisory Committee of RBI to license small finance banks, Vaidyanath Committee on Cooperative Reforms, and the RBI Expert Committee on the Primary Cooperative Banks. With those words, may I request the moderator of the session to kindly take over.
Morning, ladies and gentlemen. I hope we'll get a little more audience by the time I finish speaking so that you can listen to better people. I won't take too much of time. My job is to be a timekeeper and to listen. Govind has been saying that you'll ask too many questions. Those I'll ask in the classroom. Here we are at the outset, I'd like to congratulate Sa-Dhan for this tremendous achievement of having been a good association and a conscience keeper for the microfinance sector and the inclusive finance sector for the last 25 years. They've been very inclusive, working with a whole range of very small and diverse set of entities, and have played a very significant role in policy advocacy and so on, and also had fantastic board members and CEOs. I also take this opportunity to remember Satish, who unfortunately passed away. He was a great friend. So on this occasion of the 25th anniversary, it is a good time to take stock of what has happened in the inclusive finance sector. Obviously, the fact that we are now talking of inclusive finance and not microfinance itself is a fundamental change, that the nomenclature has significantly changed. The note provided by Gigi and Chandan identify 4 phases of microfinance, and of course that is what it is. We started with the SAG bank linkage program, followed up with the JLG type of micro lending, then started mainstreaming it, becoming non-banking finance companies, regulated non-banking finance companies as NBFC, MFIs. Several of them have gone into becoming banks, 2 of them represented here on the dais. And hopefully a few more on the dais will become banks at some point in time. So it's been a fairly interesting journey, and I have been an outside observer. It is time for people who have been within to tell their trials and tribulations. So what I'd suggest is about a 5 to 8 minute initial presentation. I'd indicated 10 minutes, but if you can do that so that we can have a greater audience interaction, and then we can get back. Let me start with Chandra Ghosh, my good friend from Bandhan. I'm a prof, I can only stand and speak.
Thank you. Respected industry colleagues and all the dignitaries of this conference, I congratulate to the Sa-Dhan 25th years of this organization, which is the oldest one in India. A lot of contribution have been given to the sector, and the topics whatever given on that transformation, everyone know about it on that, what we are contributed to the life of the people. I just given you one example. Last month I met the customer. Bank have that the customer service committee. Customer has come to explain how he has been success in that business. So women is in talking about it. She took the loan, the 10,000 rupees before the 10 years. What is the job she is doing? She is doing that, purchase the parts of fan, assemble it in home, and selling to the local areas. This is the starting. I asking that what is the now? She said that now I am manufacturing 6,000 fans in a year and selling to the same little bit more areas and earning 2 lakhs per month. When talking more, she said that she employed the 20 people in the local areas. If we see that these women, how transform the life from without income has coming to income of the 2 lakhs per month, microfinance contributed. Lots of this life have been changed. And how they are contributed to this. If you see that before this, the women, if children ask the money for ice cream, maybe she asked from the father, and father will be like to shout or beaten. Today, she is not asking from the father. She is giving from herself, and she feel proud. She fulfill the demand of the children for ice cream, from school fee, for tuition fee, for the dress of the festival, and everything are providing by these women. And she feel proud. And she is now decision maker in the family. So if I say that the one simple women, before the intervention of microcredit, how they are changed their life, how they contribute to the family, how they contribute to the society. So this is the biggest achievement in our country, which microcredit have been given on that. Second point, you look on that, 6 crores the customer of microcredit in India. I say that if we deduct on that all of the overlapping, 5 crores is there. In the one women explained the 20 new employment generated. If one customer create one employment, there's a 6 crore employment generated by these women of our country. Those are not counted. If you see that this is the biggest opportunities for India to create a new employment by the microcredit and created a new entrepreneurs. All they are build up themselves as entrepreneur. The last session, someone told that the agriculture, the contribution to the GDP has come down from 55% to the 18%. But employment, till now 55% on agriculture. When this type of microcredit we are expanding more in rural areas, there is a big opportunities. The agriculture labor will be like to convert it to this microcredit enterprise, and getting the microcredit help, they will be start the enterprise, or they will be like to work under these women. And that is the change have been happened, and microcredit hasn't contributed on that. I feel proud all of us on that, working on this segment. This is not only the business, this is also lots of social impact is there. And now, if I come to this, the society, there is a status they are also getting on that in the society. They are counting. Yes, 1-2 challenge is there. The first challenge, if you see that the women got the money, so first husband has been reacted, and sometimes they are tortured to the women, snatching the money from the hand of women. This happened. And this is in some case we also found in that, and it is some part is happening on that. But after that also, the lot of positive things happened in there, which is the change. Coming to the next point, when this money is earning by the women, they are purchase the small piece of land, they will purchase some of the ornaments. That study we have been done on that, we have been find out on that. They are not use this money as a unproductive way. And that is a very big impact to the society. Finally, when this level of the people income has increased large, our per capita income of country will be like to increase very bigger way on that. And that is a big impact of microcredit, and we change the life of the people, happiness in the family. That is the big achievement of microcredit. Thank you, sir.
Thanks a lot, Dada, for getting the client perspective and indicating that you have been continuing to make impacts even though you have grown big. So that's true, as Bandhan Bank diversifies and gets into multiple areas which a universal bank ought to, their focus on the microfinance credit, our clients have not changed. I'd go to Govind now. Do you want to become a universal bank? Why don't you start from there?
No, I think there is no brainer there. I mean, there's nothing wrong in becoming universal bank. You all get all pluses only. There is nothing which is not there with universal bank, and you don't get by becoming universal bank. The only thing is, another point is that as a small finance bank, you have all the product services, every channels are available. These are only 3 regulatory requirements which are different, which are better for universal bank. So maybe your returns or your KPIs and your returns will improve little bit because you have a lesser PSL to maintain from 75% to 40% or lesser capital adequacy. Otherwise, I think from the compliance angle, from the regulatory angle, the way RBI looks at the way the inspection happens, all KYC, everything is at par with universal bank. So I think it's very important for all of us to understand there is no difference between universal bank and small finance bank as far as basic banking is concerned. It's only capital adequacy and loan ticket size and PSL. Those are the only three differences. And my sense is RBI will start looking at these things, looking at SFBs to become universal bank, maybe next, few years down the line. Having said so, I think that the topic was more about, I think you have hijacked, Sriram. I mean, see, from my perspective, I used to be a hardcore universal banker, and I moved from Mumbai to Varanasi to set up this. So the whole idea was the type of double bottom line, this industry gives. And even today as a banker also, we still feel that, the positivity of that double bottom line. In fact, people were talking about Brij Mohanji at the way, I think he dreamt of microfinance to reaching this scale, in fact, and he must be very extremely happy today. He's on the front row. We have another person always talk about, people like, Nachiket Moore, who had deemed that, these MFIs should grow much, much bigger and become mainstream, in fact. And in morning we heard about NABARD and SIDBI type of institutions. They promoted these, microfinance and whatever scale we are seeing today, there's a big contribution of all these institutions in that way. From me, as I mentioned, double bottom line, and the way we have seen overall microfinance, I will not go about individual clients, but two important things. One, I think we have promoted self-entrepreneurs, in fact. That's very, very important. I think a country like India with 140 crore population, you need self-employed people who are self-entrepreneur. Creating jobs for so many people is just impossible, in fact. So I think there a big role has been done by microfinance. We can keep debating whether it is 4 crore families or 5 crore families, but the number is large, and not many countries in the world are having that of population, in fact. So this is really And second part is the women empowerment. I think the data may differ, but my sense is in JLG it's almost 98% who are through women. And the women empowerment, it may not have reached the level where we want it to, but I think there is a big impact, the revolution what microfinance has brought in the lives of women is significant. And of course, much more is to be done. So I think that is what I look forward. Or these two are very, very important. Double bottom line plus these two aspects very, very important. About the industry part, because I am also part of this industry. I mean, earlier as a banker also, and later as a promoter also. Two very important things I have noticed about the industry. One about the resilience part of this industry. I think, so people talk when we meet the investor also, हर बार बोलेगा भैया अगली बार इलेक्शन को तो क्या होने वाला है, फ्लड आएगा तो क्या होने वाला है, ड्रॉट आएगा तो क्या होने वाला है. These are very typical questions we all face across, in fact. And they have seen for decades, for ages, we have been facing these things, and we have come stronger each time, in fact. Demon happened, Andhra crisis happened, we see Assam crisis happened, we saw the mother of all crises, COVID happened, in fact. And the way we have come back, in fact, in all cases. And as I mentioned, much stronger than what we are earlier, in fact. So that is, hats off to this industry for that. The second part of the adaptability. So, I mean, with all due respect, sir, we talked about universal banks and other banks. Even today also the most disciplined, entity in Indian context is microfinance institutions as far as credit bureau reporting is concerned. Everyone gives data on a weekly basis and there is no default. In fact, we as a MFIN member, a Sa-Dhan member, Sa-Dhan and MFIN ensure that it is done. That may not be the case with all the universal bank when it is coming to reporting to credit bureau. Not only reporting part, even the way credit bureau was developed and established and implemented by this industry. We always thought that this industry it is just impossible to have a credit bureau. कोई डेटा नहीं मिलता है, रेशन कार्ड नहीं मिलता है, KYC कुछ पता नहीं होता है. These are illiterate people. In fact, we always thought about that part. I mean, maybe outside, external people thought about that part. I still remember the way Mr. Bejay Mahajan, Vasudevan, Samit Ghosh, all these people worked very hard along with MFIN and Sa-Dhan at the time. And, and today it's one of the best, credit bureau across the globe, in fact. So I think these are some of the things, and we have seen the type of digital footprints we have got with, our touch remaining there. I think that the type of digitization we have got today. So as a banker, you are talking about a banker. So today I run both the businesses, microfinance and non-microfinance businesses. I can tell on this forum that my 100% digital onboarding is happening for microfinance today. I'm not able to achieve on the non-microfinance side that way, in fact. So that makes a big difference, you know, when we talk of microfinance, the type of adaptability we are able to showcase, and that is the reason why I think we have been able to grow. Today we are talking of 5 crore, 5 lakh crore, 6 lakh crore. The you know number is really humongous. So my sense is the industry has really done very, very well. Going forward, if you are looking at the industry, I think two important things from my side, the way I look at, you know, rather three things. One is the governance piece. I think when you become mainstream, in fact, for last 15 years, we have been talking of mainstreaming, and we have actually seen mainstreaming of this sector happen. Maybe almost, you know, 8 or 10 companies with this significant microfinance presence are all listed today. They are a public listed company. So I think governance, I think we'll have to improve a lot on governance part, and the way public looks at it, the way RBI looks at it, the way you know government looks at it, I think it's very, very important to do little more on the governance part. I think that will be important. Second, controls part. I think we always talk controls. We do have controls in play. I'm not saying we don't have, but I think when you become mainstream and the complexity of microfinance has gone up significantly now during last few years, I think it's very important for us to have better controls in terms of risk practices, in terms of vigilance, in terms of audit practices, in terms of compliances. I think the controls part needs to be much, much better. So I think these are my opening comments. Thanks, sir.
Thank you, Govind. I'm sorry I sort of put you on the spot a little bit, but the whole idea was to, while Dada talked about impacts, it was also to look at how do you look at the future. And that was a provocative question to ensure that you look at the future. I'll go to Bonam and then I'll come back. Bonam, I want you to start off by saying, what is it that the big banks, you know, you were in ABN AMRO, later RBL, RBS and then IndusInd. Why are you guys interested in microfinance? Is it person driven, or and why are you lapping up you know microfinance institution after institution while you have enough business to do elsewhere? And how do you look at this?
Good morning. Sir, I'll try and answer the question towards the later part. But just to sort of look at from a sectoral perspective on what we are dealing with and what is the requirement of the client. The thing which we have seen, I mean, the first session has talked about the stupendous work which the sector has done. What it has done is what we traditionally call the pyramid, where a lot of people were there at the base of the pyramid. That has started changing, and we've started seeing the people moving up from that base to the next level. Now, I'm coming to the response that you are seeking from me. One is, this has opened up two opportunities, and this is what we always thought and believed in, that there's a huge opportunity in dealing with this segment. When the segment moves up from the base of the pyramid to a level higher, one, of course, there's a credit requirement which will get filled, which could be in terms of the aspirational requirements which are coming in from this segment, whether it's on asset creation or a larger enterprise which gets financed. And of course, with the data and other things, the financing is becoming more of a norm now with many institutions coming in. That's one part of it. The second part of it is there is a vulnerability which the segment faces, which is still perhaps an unfinished agenda, and which we perhaps will see a lot of work happening in the coming years, is what happens to a client who is primarily dependent on his physical labor or a skill set once he attains a retirement age. We at least have not focused too much as a sector in trying to address what sort of a retirement planning will have to be done for this segment, number one. Number two, what is the vulnerability reduction measures, whether it's on health insurance or getting the life of the earning member insured. So a lot of other things which are still not, which have not still seen the type of depth and engagement which the sector should be having, which we see as a huge opportunity going forward as we move and we start seeing the sector developing. In addition to that, of course, there's no one-stop solution. We will have to have a multi-pronged approach. There are sector-specific initiatives which will have to be dealt with on collaborative mode. It could be a value chain financing and others, which is an opportunity which we have seen the ecosystem developing, which is what we are trying to work with some of the stakeholders there. which will add on to the business opportunity which was not there for banks like us. Second is there's a lot of work again, unfinished agenda. This is the risk mitigant in terms of the credit risk, how it can be mitigated with products which, I mean, people have talked about when a natural calamity happens, how is it getting mitigated. All of this will, with a collaborative mode, we will be able to perhaps work with some of these agencies and start looking at how to bring down the cost to the ultimate customer segment. So overall, I think it's been a it's been a good contributor to the bank on the business side, both on the top line and the bottom line. And we see that the opportunity is much more. One request that I might, if I can, is to sort of see that maybe the size of the sector and the complexity with which the other banking this thing has, maybe there will be a need for certain regulatory framework which differentiates between what happens on the inclusive side and what happens on the regular side. If that differentiation is brought in, perhaps it will give much more room for people to innovate and start working more aggressively in this space. But we are continuing to be bullish on this space and see a huge opportunity for further growth and with the upliftment of the sector. Yeah.
Thank you, Bonam. So, I guess that is what you said is one of the challenges, you know, once you move from one regulatory framework to the other, then you are subjected to the new regulatory framework and therefore, having gone there, do you want a new dispensation for the old business that you're doing? I mean, it's a difficult conundrum. This is, you know, basically this is the problem that all startups face. You know, when they are startups, they are very innovative, and by the time they go to market, suddenly all the regulations come on them and they become so mainstream that they forget their innovation. So that's a conundrum that we'll have to live with. But I'll go back to Sadaf's side. I mean, your group as a background comes from 100% secured lending and goes into 100% unsecured lending. How did you navigate this journey and how do you see this as a future?
No, thanks, Sriram. I think if you look at from a group perspective also and from microfinance perspective, if you look at the target segment, the addressable segment has been the same. So in India, we define microfinance as an unsecured lending, but globally, microfinance is defined as a ticket size. If you are lending a certain ticket size, then you are catering to a microfinance client base. So if you look at our businesses, be it gold finance, the average ticket size is around 50,000. We look at our affordable housing business, which is average ticket size around 1,25,000. You look at our two-wheeler finance, or for that matter, microfinance, which I had. All of the businesses are focused at the bottom of the pyramid. So our commitment towards the bottom of pyramid has always been there. And I think as an NBFC player, not being a bank, our responsibility is to fill that vacuum which is left by the bank. So if the banks, of course not the banks on the dais, they are really at the bottom of the pyramid, but conventionally banks have been catering to tier 2, tier 3 cities, but not deep rural. So that is where I think the strength of an NBFC infrastructure is there. At a low cost, we are able to reach those households and we are able to provide credit. So that is the thought process behind our group. And we look at a customer as a customer where we can keep a household where we can serve the life cycle needs. So the customer is not only a microfinance customer, she comes in for the first time into the formal segment through microfinance, but over the period of time, she kind of has progressed with the journey, she is able to offer she is able to avail multiple products. I think that banks are definitely able to do now, but as an institution, as a group, that is our focus. But coming back to, I think, evolution of microfinance, I've been associated with this sector for last 2 decades, and I've seen it very closely. I think from a customer side and anecdotally, I can tell you, the customer who was thrilled to like take a microfinance loan for the first time, signing the paper. And she used to feel proud that I am able to sign for the first time. Now she is doing digital transaction. She is paying digitally, she is borrowing digitally. So that is the evolution that has happened. From not being able to sign her name to do digital transaction for borrowing and repayment of the loan. We are installing QR code into her business and she is able to receive her revenue through digital payment. So that's the evolution that has happened. And I think the role of microfinance is not just limited to financial inclusion and the way it has been defined conventionally. It is also very, very important in terms of like inclusivity from digital inclusion side, inclusivity from gender inclusion side, because if you look at, I think the world is focusing on SDGs and we have our commitment to achieve those SDGs, and out of the 17 SDGs, microfinance cater to directly to 7 SDGs. So definitely there is a much, much more holistic kind of a contribution of microfinance. I had the pleasure of being a part of a discussion yesterday. There was a Niti Aayog discussion on Indian development model, and microfinance finds a place there. They look at inclusive growth, and they feel the microfinance can contribute. So I think that is the journey that microfinance has made over the period of time. I remember being a part of the sector where our repayment rate of 99% was always looked with a eye of suspicion, for the lack of a better word. But today you see how the regulation has played a role. The Maligam committee came in after, of course, a crisis, but they put out a very well-defined regulation, and many banking sectors, many banking players, many NBFCs came into the sector. And now you can see, and Govind sir talked about resilience. You have seen during COVID, the sector has come back much, much more stronger. And every crisis, I can tell you, be it Andhra Pradesh crisis where the industry was just 20,000 crores, and I'm talking about NBFC, MFI industry, which has gone to around 3,50,000 crore. So the industry has shown maturity, and also the client has grown. So gone are the days where you can give whatever loan you want to give to the customer and customer will simply take it. Now customer does ask us, why are you charging us X fee? Why are you charging us this interest rate? So the business has changed, and I think both the sector players and the regulator has played a very, very healthy role in this. The new regulation that have come in are very, very good in terms of an FOIR being put in place, which ensures that there is no over leveraging of the client that is there. And I think that is the sign of maturity of the industry. RBI is comfortable with so many players deregulating the interest rate. So that gives the sense that RBI has been kind of comfortable with the way microfinance is happening. Definitely, I'm not saying there is no room of improvement. There is a lot of room for improvement. But I think microfinance now at this stage has reached, and globally I can say, I think there is global audience here. The interest rates in India in microfinance are the lowest as compared to the world. And this is on the back of that all the money that NBFCs especially use is borrowed money. There is no deposit taking availability that we have. So I think from that perspective, industry has evolved quite a bit. And I think this is a sector which can contribute to the economy, contribute to the social development, and definitely the social goals in terms of poverty alleviation, in terms of health and well-being of the rural household, in terms of gender inclusion, and employment at the bottom of the pyramid. So I think industry has an important role to play. There are a couple of things that we need to address. As we say, we need to build climate resiliency. We are seeing the impact of climate change everywhere. I come from an institution which has its base in Kerala, and Kerala a few years ago which saw a devastating flood, never seen in 100 years, which has a huge impact. And I think with the kind of weather changes we are seeing, that can happen anywhere, those kind of things. So there has to be a policy on climate resistance, and MFI industry has to take care of its borrower because our fate is linked with those borrowers. And second thing is, I think from this was my suggestion to the Niti Aayog also, we need to look at certain aspects of financial vandalism. Uh, though gone are the days where elections used to have an impact on the microfinance operation, but still there are pockets where people can stand up and say that don't repay X, don't repay Y. So those things have to be curbed, those people have to be taken to task, and we have to ensure that this is a legitimate kind of a key important sector which needs its protection and rail guards so that it can drive on its paths. I think from that perspective, the industry has been doing well, and I think there are tremendous kind of growth opportunity and opportunities we have right now catering to 6.5 crore household. There are many more households that we need to cater to. I think in the regulation itself, we find a room that there is no use of word JLG. So there is a hint towards moving towards an individual underwriting. The FYR itself is a suggestion. Now the credit bureau database is very, very robust. You have MFIs submitting data on a daily basis. And Govind sir rightly said that this is one industry which is most disciplined in terms of submitting data. So you can see that. And of course, like we have seen banks like Bandhan Bank evolved out of the institution. So there is a logical progression of growth as well. So industry will continue to do well. There are certain areas that we need to focus on. I think if we continue to do that, the client protection principles have to be there in place, and we have to be more conscious of our surrounding and the environment that we are operating. Rest, I think things are good.
I'll come to you, Vivek, and then I'll come to you finally, because as an academic, you'll sort of wrap things up, hopefully, for us. Vivek, if you look at the journey of this industry, it started as not-for-profits, then there was one phase where we talked about transformation into, and mainstreaming into NBFCs. And from then on, there was this going to the market, IPOs and things like that, and then banks, starting with Bandhan, small finance banks, and then a flurry of activity which took over, banks taking over microfinance institutions being taken over by large NBFCs and so on. Amidst all this noise, you are an MFI standing there. So how do you see this space as we go along, both from a historical perspective and going forward? Is there space for standalone MFIs, or is that standalone MFI only a transitory phase before you become something else? Both from an aspiration point of view and from an imperative point of view.
Thank you so much, Professor Saab. I think microfinance companies are aspiration of rural India. Means we are brand ambassador of aspirations of rural India. The way we have created our reach, our penetration in last 20-25 years, this is only credible way to finance in the rural population. As of now, I'm sitting after 25-28 years of journey of microfinance, seeing all from informal sector to formal sector, from banking, NBFCs and NBFC MFIs as a special category. There is a huge opportunity for everybody to grow. When we started our journey almost 6 years before, 6.5 years before, there was a common question from all the investors and bankers. It was just, everyone was, almost 9 SFBs were there. Bandhan was already a bank, and all other players were quite big at that particular time. And I was facing the same question from all the bankers and investors. Why you are entering in microfinance again? Is there any scope for the microfinance? In last 6.5 years, we have reached almost 1.7 million households. We are closer to 6,000 crore AUM. We have disbursed more than 10,000 crore in last 6.5 years, facing all the crises, post-demonetization, post-GST crisis and COVID. And this was only possible because of our diversified approach. And I think the incremental population, that is one of the biggest strength of the country. Means sometimes population is a challenge on other fronts, but especially for the financial inclusion space, we are almost closer to touch almost 150 crore population. It means the total households are almost more than
40-45 crore. We have just covered 6 crore households. In my opinion, 50% of Indian population is either it's at the base of pyramid or at least 1 or 2 notch above the base of the pyramid. And that is the area where microfinance companies, small finance banks and banks, those who have converted from microfinance to bank, we all are operating in that area. And the sector has served the country in a very different way. That earlier we were competing with, as a microfinance institution, we were competing with the money lenders in early days. Our biggest statement was that we are formalizing the sector and we are removing rural population from the clutches of the money lender. In last 20 years journey means we can see the money lenders are also lending at almost closer to competitive rates what microfinance are lending. It is not very 10% per month to 3 to 4% per month. Means that journey is because of impact of the microfinance. On the other side, microfinance companies are also competing with banks, but microfinance journey is being supported by the banks. Means whatever we are today, it was not possible because without the support from the banks. As a microfinance company, we are, for our borrowings, we are totally dependent on the banks, SIDBI, NABARD, and big NBFCs. And it is a collaborative approach, means we have never seen a conflict between these three entities, especially the large NBFCs, big banks and small finance bank. They all have supported journey. It means to reach the unreached population in next 5 to 10 years, microfinance is going by its golden era, and where the government, the central bank, they have supported and they have put some expectations from this sector. Definitely, we all are trying to meet. As a sector, because we deal with the base of the pyramid, we are having our own challenges. Every time, after having 99% good work, we are being blamed for just anything, 0.5% or 0.1% has happened any part of country. And being just as a poor in your rural India, if they are blamed just for plucking a mango from anyone's garden, they become shy. In a similar way, microfinance institutions, they become just shy if they have even directly or indirectly something has happened in the remote rural India. It means we are responsible, we are more honest, we are more dedicated to the society, and it is the time for us to deliver what we are doing and adopt. Means especially the technology adaptations are the key. Most of us are doing that. And on the other side, the positive work of the sector should be published in a positive way. We are dealing with almost 5 crore households. It means we are directly or indirectly impacting 25 crore lives every month. And out of these 25 crore lives, it means 5 crore plus transactions are there from the sector every month, because even weekly collections are there, fortnightly collections are there, monthly collections are there. If we count everything, I think it is more than 10 crore transactions are there every month. And out of that, 97, 98, 99, 97% collections are smooth and there is no hassle on the ground. But as a sector, we have to be more careful for 2%, 3%, and that is coming because of wrong sourcing. That is not coming because of something else on the ground. Sometimes when we are growing, we miss certain parameters or certain basic principles are missed in early stages. But we all are quite vigilant, and even in the revised microfinance norm, when the rates were allowed to charge and the freedom was there, the average interest rate charged by 15, 17 large microfinance institutions is still in the range of 24%, and that was prescribed by Malegaon committee, and we have negotiated with our lenders to get the better rate, and to absorb our risk, I think it was almost 99% plus repayment rate business earlier. It is not, as of now, it is not 99%. It is closer to 97, 98%. And we should be open to accept that. And that 97, 98% repayment rate is even very good, even having the collateral-free loans in remote rural area that is coming through the intent of the borrower. So from my opinion, I personally as a practitioner in the sector for more than 2 decades, I see that there is a huge scope for the sector, and even including one from the family, it is a time where we can customize our product as the requirement of the family requirement of the borrowers, and suited to their son and daughter, those who are going to the schools, their requirements in some way. And we have asked to RBI several times for the relaxations in terms of qualifying assets. Means what we all are facing as of now, that is becoming another big challenge. Because earlier the qualifying norms were comparatively more favorable. In revised conditions, if I am putting 10% of our liquidity in our system just to meet the future obligations, these norms are even squeezed. So these are some challenges, but as a sector I see, as a microfinance practitioner, I see huge opportunity. Converting to a bank, it may be a choice. Acquisition by a bank, that will happen. But from Satya's journey, I can say that there will be many more new entities, new players must be coming in the sector again and again. And if you go by the list, when I started my journey, I was the 53rd microfinance NBFC MFI in the country. And as of now, we are having almost 73 microfinance institutions NBFC MFIs. It means 20 new licenses, active licenses are there in last 6 years. It means those practitioners who have worked for some companies or who have learned enough for the sector, they are daring to set up new entities and new institutions, and most of them are being inspired by Ghosh sir, Govind sir, and they are all our legends. Means I may have spoken too much, but my message is that as a sector we are having a huge scope, huge potential, and we can achieve many more. Thank you.
Thanks a lot. Thank you very much. Prof, while summarizing and sort of conceptualizing all these things that have come, one of the things, if you could weigh in on, which was what Sadaf indicated as vandalism. See, one of the things that the sector constantly faces is political threats of, don't pay, write off, and so on. In one sense, that is also possibly an articulation of an underlying distress which doesn't have a structured way of being addressed. There might be a client distress, but widespread client distress, but it's not being addressed in a structured way, unlike the corporate sector which has a CDR. Is there a constructive way of also addressing that, if you can think about it? Sorry for throwing a googly there.
Yeah, sure. Thank you very much, and a very good afternoon to all the members in the audience and all the members on the stage. Well, first I'd like to congratulate Sa-Dhan for these 25 years of glorious leadership and in this microfinance industry. Honestly, as a researcher, I think microfinance is not only about money. I think it's a broader objective of touching the lives of people. And as my speaker, Mr. Sayeed, said that, microfinance finds at least 7 mentions in the SDG goals. So it is in a very, very high pedestal, and it is not only a financial product. It's a financial product and a social product. Let us look at it like that. So let me start with a little bit of the evolution and its status now, and then I'll come to the challenges of that. So microfinance have 4 phases. So the prior to 1990s, it was mostly conceived as helping the poor with subsidized credit. But we all know in economics there is no free lunch, and if you give money, if you don't get it payback, it is not sustainable. So the first phase till 1990 was something like that. And then probably 1990 to 2000 was the birth of microfinance, where we combined objectives, social objectives with economic efficiency, that we need to recover the money to be sustainable. And that's why the microfinance was born, with the NABARD now making it a great program of self-help groups with the bank linkage. And then, of course, as the industry tries to grow, then at some point of time it faces growth issues and practices which are different. And then it came the 2000 to 2010, we saw a lot of regulations, and those are proactive regulations, some regulations just to help you grow, and some regulations probably to protect the borrowers also. So that was a great decade, and now of course we are living in a very, very nicely beautiful world, I might say. There is nothing perfect, so we have to only address the difficulties that we have, but I think it is a beautiful world. To give you some perspective, that we know that microfinance loan portfolio is about 3.5 lakh crores now, and it increased by 21% from 2022 to 2023. Notably, the number of accounts also increased from about 1,250 lakhs to 1,350 lakhs, which is a 10% growth. Why do I say 21% and 10%? Because this means that the average ticket size increased by 10%. That means people are not borrowing just only as a sustenance, they are also borrowing to better their lives. So, if you look at it in the big, I think one of the speakers in the morning said that we started with the poverty alleviation program as the face of microfinance. But today we are talking about sustaining livelihoods, sustaining businesses, and may I take it a little bit further by saying, want to sustain dreams. We want to sustain dreams. However, so let us look at the effects that microfinance had. One is the usual economic impact, which is about increasing your income. So we do before and after studies to see how your incomes have increased, whether number of sources of income has increased. But more important than that are the social impacts, in which I will talk about education, and not only education general, but education of the girl child. Because when women get the power of decision making, there are ample research studies to show that the enrollment and education of girl child increases. So that is a great thing that has happened in education, and in health and nutrition also, because we give money, but we measure our productivity and other things, not only by output, but looking at the labor that a person embodies, and that in nutrition and health is one of the part of that. And finally, about the empowerment. I also am a part of an NGO. That is not a microfinance, but it is similar a story like that. In our NGO, some people used to come and put thumb impressions, and then used to get a check. Nowadays, they sign a check, and sometimes they just do NEFT transactions. Microfinance is also about empowerment. It's about self-esteem. It's of gender balance in some sense, because, and as the data was presented in the morning, that the women participation increased from 16% to 31%. We are not yet at the same as the male participation rate. But given that women are up to 50% of the labor force, we should similar participation. This is a huge, huge potential that the microfinance is driving. Now, let me come up to the challenges. I see a few challenges in microfinance. First, as we work, there's a tussle between, extensive growth in the extensive margin and growth in the intensive margin. Should we diversify across physical space, or should we concentrate in a particular, not in a particular, but in a particular region, and increase the intensity of that funding? I say this because in IGIDR we are doing a study, Sa-Dhan has commissioned and SIDBI is funding that, to look at the social impacts and the economic impacts. And in that we see that there are many, many borrowers who are first-time borrowers, second-time borrowers, third-time borrowers, even sixth-time borrowers, which somehow means you can interpret in two ways. They're never getting out of distress. But if you look at the sources of their livelihood, then you see they had a basic source of income, which is only to pay the money lender on just to eat some food. But now they have poultry, they have cows, they have this, they have durable goods. So this distribution of the number of cycles is not only the number of accounts, it is the number of distribution of cycles in those accounts, which is very important, and which clearly shows that And of course, you get more and more cycles provided you are able to pay back, because otherwise nobody is going to lend it to you. So therefore, it means that there is some sustainable things that are really happening in this space. So you have to have a little bit of balance between the extensive growth and intensive growth. The data shows that it is little bit disparate. Now, whether you spread yourself thin across all people, or you actually do and reach some level at a particular region and then go forward, this is something you have to do. I thought about the digitalization. I mean, you know, nowadays everybody does digitalization. We should do digitalization, but we should also remember that we are not talking about the urban elite or somebody. We are talking about the rural poor. I mean, I don't want to use the word poor. So everybody's financial literacy is not same. The financial literacy is one. So when you do a digital evolution, then there is a receiver and there is a giver. The giver is already like me, or a microfinance bank is already digitally literate. But you have to look at the receiver, whether he or she is competent enough. And remember, in that array of people receiving the loans, there are first-time loaner, first-time accessing loan, which is for the first time, second, third, fourth. So unless they all become familiar, you know, to introduce a blanket digitalization which applies uniformly to all is a little bit tricky process. I'm not saying that you should not do it, but it has to happen that. It has to keep this into account. The other one, which I also think is important, because digitalization is also good for efficiency, because you cut down on your cost. But you have to also balance somehow this digitalization with personal interaction, because the human touch is very important. You know, sometimes look and call, I mean, in certain cases you don't pay, I just cut you off. I don't give you the second loan. Versus if I go and talk to you and understand that what is your problem, what is your, you know, what is that you are facing, this human touch should not be lost. There should be a balance between digitalization and the human element in this microfinance banking. And finally, coming to your question as to the distress, sometimes we say that there are distress, corporate sectors has even willful defaulters which are somehow waived off, and poor farmer even whose lending is very, I mean borrowing is very less, their loans are not waived off. But it is a moral hazard problem in some sense. The moment we start, waiving off loans, then it sets an incentive that maybe this will happen again. And therefore, in my opinion, it actually impacts your incentive to work hard to be more productive. So maybe microfinance also slowly needs to have, 99% rate of payment is honestly very high. Because in business, for example, and in business, we have AAA companies, AA companies, their rate of default is 8%. And that is because by construction is risky. Now in microfinance is very high, I mean prepayment is very high because the lending that happens to a purpose is very uniform. But as you want to transit people to higher and higher level of activity, they will have risk. And therefore that time default will happen. And microfinance must build some sort of internal models by which they can look at what is a genuine distress versus what is a engineered distress or something like that and solve this problem. And finally, I just like to thank Sa-Dhan and all SIDBI, NABARD and all people involved in this microfinance industry for ushering in such a inclusive society. We have come a long way, and but there are many more miles to go. And with the collective effort of everybody, I'm sure we'll cross those miles and make this world a very beautiful place for everybody to live in. Thank you very much.
Thank you. Thanks a lot, Prof. It's such a pleasure to have such a wonderful panel. One took all the questions in good spirit. Two, all of them maintained their time, so we are not significantly over time. I think we have a good half an hour to go with the Q&A. We will take questions from the audience. What we'll do is, my request is, please restrict your interventions to questions and not observations, point number one. And point number two is we'll possibly take questions in bunches of 5 so that we sort of optimize on time. Please also let us know to whom the question is directed so that it's easier for us. Otherwise, we'll have to draw a lottery and then say, inky, pinky, ponky, you answer the question, right? Yeah, we can. And anybody else who wants to, please stand up and show your hand, please. Yeah, I'll come to you. Yeah. Yeah.
Thank you very much for getting chance. This is Shohrab Ali Khan, Deputy Executive Director of TMSS in Bangladesh. TMSS is one of the largest MFI of our country and second largest NGOs in Bangladesh. I would like to request Mr. Chandra Shekhar Ghosh, Honorable CEO of Bandhan, one question. How Bandhan working for developing agricultural entrepreneurship in very rural area? And another question, please, Honorable CEO of MicroCapital Limited. What is the main operational differences activities of microfinance activities between not-for-profit and company? Thank you very much.
Yeah, can we hand it over here? Mic is there? Ah.
Yeah, I am Farooq Shahab. I've been associated with microfinance for the past 2 years only. Earlier, I was a traditional public sector banker, quintessential public sector banker, doing this from 10,000 rupees loan of IRDP to $1 billion loan. So anyway, so my question is to both the academicians, Professor Sriram and Professor Sarkar, and also to Mr. Ghosh and Mr. Govind Singh, and also to Mr. Tiwari.
It's for the entire panel.
Yeah,
Please shoot your
excluding two. Excluding two. The question is that it's a trigger from Professor Sarkar that, what I found is that most of the MFIs are aspiring to become a small business finance, and they are aspiring to become universal bank. So there's a conflict between intensive microfinance activity and extensive microfinance activity. My concern is that as a chairman of a local area bank, my concern is that when we are expanding, aren't we going to lose focus on intensive microfinance activity in a geography? So especially Mr. Ghosh has become a universal bank from a microfinance institution.
Sure, we got the question.
Yeah. So I'd like your perspective on this.
Sure.
Entire 5 persons.
Sure. There was one more question from that side. Anybody? Yeah, please. There's a mic there. You can just go. Yeah.
Hello, hi. Ashlesh here from Kotak Securities. I'm a research analyst covering the microfinance sector. So a couple of questions addressed to the lenders out here, MFI lenders. Firstly, on the penetration of credit part, we have roughly 65 million households under the ambit of microfinance today. Roughly about one-fourth of overall households in the country. So going forward, so this seems like about a 25% penetration is already done. Going forward, how much of scope do you really see on a realistic basis which can be serviced by the MFI sector? That is question one. And secondly, on the FOIR guidelines which came in last year from the RBI, I believe most of the lenders today would have access to a decent amount of data on household income as well as leverage and fairly granular data. The question is, how reliable, useful do you think this data is? Can that be used for, let's say, cross-sell of other products? So yeah, those two questions.
Thank you. We'll come back for another round. Please, we'll come back for another round. Let's get one round of answers before we forget the questions that have been bowled at us. And since I'm the most forgetful, I'll just answer this question about universal bank, local area bank versus design issues. This is a big conundrum. I'm sure the reason why you asked academics and not Govind was obviously he would give the answer that he wants to become bigger and a universal bank. It is a policy problem. The problem is that when you set up specialized institutions, they operate on their own logic, but if you're putting specialized institutions in a market framework, the market rules will pressurize them to deliver returns which are sort of expected by the market. So therefore, even if Mr. Chandrasekhar Ghosh wants to do 100% microfinance, the market will pressurize him saying that, oh, your book is not, it is not secure, it is this thing, what is your risk weighted, this thing, what is your NIM, what is other things, because they are no longer comparing Mr. Ghosh with Satya or with any other microfinance institution, they are comparing him with Kotak and with ICICI Bank and so on. So that is the problem, and creating specialized institutions makes sense for penetration, but for that institution itself, there has to be a growth path. I mean, it doesn't make sense. So therefore, one way to look at it is to say that can we register more and more specialized institutions and graduate them out, like they are doing with the microfinance clients. You get them into the group and possibly graduate them out as they become larger into individual clients. So that's my answer to your question. Let me go back to Govind and you can answer the question on the cost.
Yeah, some of the questions were about, currently it is 6.5 crore household. My sense it is not 6.5, it may be in the range of 5 crore. And maybe around 18-20% of the population is getting covered through, if you cover the full family. There are two important aspects to that. One is that, the way all others also mentioned that, I think going forward, microfinance, we are not looking the hardcore 25,000, 30,000 rupees JLG loans alone. I think we are also looking at individual loans going forward. You'll see a different type of products coming up, and not only from the banks, but even for the even NGOs and NBFC MFIs. So that is going to happen. So I think the market broad basing is bound to happen. That is one part. Second part, the needs of the people who are already there, their needs are also going up, on an ongoing basis. So my sense is if 12-13% increase is there in ticket size every year, that looks healthy because that takes care of the even inflation and the other requirements of the client also. And third most important point, which was another point maybe I missed in earlier conversation, many of the pockets in the country are badly underserved today, in fact. I think this is the time, when we can look at those sectors, when we talk of, say, some of the states like Tamil Nadu or Karnataka, now West Bengal and Bihar, which may look that, they are at the top. But there are many, many states, and within states, when people come to Uttar Pradesh, because I have a large chunk there, people come to Varanasi and Gorakhpur. No one goes to Mau and Azamgarh to the world, in fact. And that's a big challenge, I think my sense is at least 30-40% or maybe little more of that lies in the geographies which are not covered by us today. So there's still a lot to do. My sense is even if there are 10 Utkarsh in UP, we can't complete the requirement of Utkarsh for next 20 years for sure. There's a huge requirement. I mean, data may be presented differently, but I think there are huge requirement, and there is and the way Vivek mentioned, there is a scope and there is a place for everyone, in fact. I mean, whether it's a universal bank, there are universal bank who are doing that part, there are small finance bank, there are NBFC, in fact, and even for NGOs who are doing only, say, 50 crore, 60 crore, type of GLPs, I think there is a scope for everyone in this space. Thank you.
So first question on that, this is an agriculture. If we see that the Indian microfinance, lump sum 50% of the portfolio are agri. Out of this 50%, the 2/3 of the agri is coming to agri-allied, which is milching cow, fish, like on that. So if you go to the other side also, 60% of this, the microcredit, are giving to the rural. So rural, only the enterprise is more, which is the agriculture. So we are all focusing on that part. Other part, if you say that the bank, we have a need on that, the 40% priority sector lending. Out of that, 18% priority sector lending will be like to pure agriculture. So automatically bank is focusing on that. Each bank are focusing on that agriculture lending on that. So this is the way it is happening on that. I haven't given the another point on that, whatever mentioned about the penetration point of view. It's a very good point because the Bangladesh team in here, I asked to the team leader that their population is a 16 crores and their borrower is a 4 crores. And if we see that 130 crores population and 6 crores borrower, if you see that, is it today now thinking about in the penetration? We are not in that level on that. Maybe some pocket is a penetrated high, which is metro or urban some areas. We should be like to expand more areas where other are not yet reached. Then maybe not the penetration issue will become on that. Thank you.
Can we go for the next round of questions, please? Yeah. Pardon me?
Good afternoon. This is.
Hello. I'm just responding to the gentleman's question on extensive margin and intensive margin. You know, I mean, one thing to notice is that, you know, we say microfinance, but the lending of microfinance tickets are not exactly the same. I mean, there is as I said, the cycle 1 borrower, cycle 2 borrower, cycle 3 borrower. As you progress on the cycles, then the ticket size also becomes larger and people are actually doing different types of activities. So in a way, it is also possible that as you go to high ticket items, then your risk becomes higher. So there is nothing, I think it's a very happy marriage that even within a particular microfinance organization, you can bucket your portfolio. And then you have small ticket lending for people whom you are trying to lift out of poverty, and then some people whom you are trying to actually put in a higher orbit. So this can happen within a particular microfinance organization, or it is nothing wrong to have one particular microfinance organization which has transcended this low earlier phases and then concentrate only on the top ones, and then have other microfinance institutions filling in the bottom spots. So in that sense, there can be a happy marriage between both extensive margin and intensive margin, and there may not be any loss of focus because the focus will come from new institutions that come, not because the current ones actually divert their focus away from one group to the other.
Yeah, yes, please. Good. Sorry to have stopped you.
Good afternoon, everyone. My name is Zubair Hassan. I am from Bangladesh, one of the microfinance organization and NGO named DORB. And congratulate Sa-Dhan for 25th anniversary. My question to all of the delegates and the panelists, how do you think about access to finance for the poor as human rights? Because so far, from your discussions, I understood that mostly the banking, access to banking and access to organizations. But if we consider the poorest of the poor, they have nothing holders. So how to bring them in the discussion and how to bring them in the financial inclusion as we are talking about the inclusive growth. Thank you.
Thank you. Would you like to take? Yeah.
It's a very good point you mentioned about it, which the Bandhan have been started that program 2006 to reaching some of the customers who are the poorest or poor, and they are not able to take the loan and then repay or charge on. We have the program is ultra poor. So we are selecting them and giving a training for how they can be manage the enterprise, and given a training for confidence building on themselves for success, and given asset for that enterprise free. And this is a 2 years project. After the 2 years, they are migrated to the microcredit organization or bank to take the loan and running it on that. So this is the project, but is a costly. Per family cost is coming on that. There is a 300 to 400 US dollar per family, but they are not asking any free money after that. So that is a good, the model. We are scaling it. We are already reached nearly 2 lakhs family like on that. Every year 10,000 to 15,000 family we are extended on that program. This is a different program. It's not as a microcredit, but they are get the access of microcredit after that. So that is, okay, thank you.
Thank you. Yes, please.
Thank you, Professor. Lot of insightful inputs there. Triggered from the story by which Dr. Ghosh started, she has generated income. Likewise, the sector has seen lot of transition or transformation with regard to product diversification also. From the income generation, income enabling loans also have been provided. For example, over 9,300 crore rupees worth water and sanitation loans are disbursed by our partners here. Now my request to comment is, moving on to the next stage, how the industry is ready for the climate action and what are some of the enablers and barriers according to you? Maybe this question can be addressed by Sadaf ji.
Yeah.
Thank you.
Thank you for asking that question. I think that's a very, very pertinent question as we face climate change. I think the climate resilience has to be built in and has to be an integral part of our lending practice and catering to, I think, the customers especially. I think there are delegates from Bangladesh here. There are impacts on rising water level in that region as well. But having said that, one of the things that we have done as an institution, we have created a natural calamity insurance policy, a NatCat insurance policy, and we are offering this to our clients as a voluntary kind of a policy. People who are living in low-lying area or coastal area where there are threats of floods or heavy rains or any sort of natural climatical event, so those people are availing that kind of policies. So that brings some amount of insulation in kind of an event that happens. But I think in a long-term sustainable manner, that can be addressed by shifting people from the higher risk areas to areas which are relatively lower risk. I think that is the long-term solution. But from a microfinance institution perspective, we are offering a natural calamity insurance to our clients. We have worked with 3 partners. We have created this product with the help of those partners, insurance partners. And this covers the household, provides a cover of around ₹1 lakh to the household. And any number of event in a year, she gets that claim. So that is the way we are trying to build climate resilience.
I am Shivakumar from John Morris & Co.
Just 1 minute. We'll take this as the last question because we need to break for lunch. Please go ahead, sir.
Sir, I am Shivakumar from John Morris & Co.
Yeah, so this and this,
from Chennai.
two questions and then we'll stop.
From Chennai.
Because 1 to 2 is lunch, and I guess they also want you to interact with others apart from us. So, yeah, please go ahead.
I am a previous banker. Apart with this experience, this one, what I am just telling with regard to microfinance, the interest rate, there are differences by many people, that is, NBFCs, all these people are charging this one. How we are ensuring that one, that it is not affecting, definitely the rates are little higher than the bank rate and other things. How we are ensuring that the income, that is, these interest rates are not affecting their income generation. Because ultimately it has to generate into the income, has to be generated to the, from that only they will be able to repay. This is first question. Second question is that when the banks are very struggling to control the NPA within that level, how microfinance and NBS are able to control within that very limited level only, how they are able to manage that NPA. And one more thing, we are talking about digitalization and all. When you are penetrating into rural market and other things, previously only when we just see the borrower and then the loan also, we are getting a failure. How we are ensuring that through the digitalization we are doing the activities. But at the same time, we are able to also recover that one. What is the technique for that? Anything it is separately followed for this? These are all my questions, sir. Thanks.
Thank you. Thank you so much for your 3 questions. First of all, I would like to address the interest part. If you go by the rural economy, even someone is acting as a vegetable vendor in the village. They invest 20,000, 30,000 rupees in the morning, and they make some 15 to 20% return on the same day. In the similar way, the fruit lari wala, they are having the same business, same model, and this 50,000 rupees is rotated at least 200 times in a year. And by this additional, it has a manpower cost, transportation cost, and many other things. But still, the this smaller businesses, they are having high margins, and they were even borrowing before when no MFI was there. They were borrowing it from the money lenders. They were paying 5,000 rupees in the morning, and they were getting 100 rupees in the evening again, or 5,100 rupees in the evening, and on the next day they were borrowing again 5,000 rupees. So this way, I think the microfinance institutions, they have helped them in getting proper capital for their businesses, for the proper growth of their businesses, and tenure of the loans are 2 years or 3 years. The EMIs are quite minimal. It becomes easy for them to repay. Your next question was, based on the repayment rates of the microfinance institutions versus banks. I'm not talking about the banks which have been promoted from the microfinance, because they follow the same principle. We do the reverse banking in general. We go to the villages, we do the doorstep services, and every month and at every fortnight, we ensure that our field staff is in the villages at right time. In our case, even the punctuality is the key. And borrowers, they don't have to come to the branches, waiting at the branches in the queue for the repayments. We ensure that we are at their doorsteps in the form of the group meeting, and they voluntarily they join the board these group meetings. That is only because they want to be in the right side of the society. They are able to understand the values of trade bureaus, and they are having aspirations to come out of poverty. So that is the second thing. The banks, because of their limited manpower and multiple product load and many more things, they are focused in many other things. And that's why we are acting as an extended partner for many banks, and microfinance and banks both are surviving together. The third part is about your digitization. I think rural is very much ready for the adaptations in the digitization. We were the first company who started disbursing 100% in the bank accounts. There were, and as of now means almost 5 crore households, they are having all loans disbursed in the bank accounts. And once we all have tried to have the repayments through QR code, APS mode, ABPS mode, whatever the infrastructure has been developed by banks and the government, we are just using the same. As a sector, we are not innovating anything. We are just adopting internally first and communicate and taking it to the rural India. Adaptations, it has some hesitations, but once they are having the confidence, they start adopting it very fast. The Facebook and WhatsApp and many more social sites, it was never trained by anyone, but almost 50% plus population is using that, and even the elderly peoples are using that. That is the way of the technology, and QR code and Phone Pay, FinPay, Aadhaar Pay, and many more models and instant QR codes. I think these have changed the life of people at the base of pyramid. Even a sabji wala, she is happy to take repayments to the QR code. A chaat wala, he don't want to accept cash because of the chiller or repayments. They want to say that Google Pay kar dijiye, Phone Pay kar dijiye. Ab aap online nahi karte kya? Matlab, I have faced that problem in some places. The chaat wala was saying that it is just 56 rupees, jab 10 rupees ka change kahan se laye? To aap Google Pay kar dijiye. So that is, adaptation is there, acceptance is there. The only challenge is that as an institution, what we are having our own willpower. If we are ready to accept, rural India is ready to adopt. Thank you.
I think we are already being surrounded by people asking us to, I'll take your last question, sir, since I promised. One last question. Please hand over the mic. That was a promise, so after that we'll finish. Don't worry.
Thank you, sir. At the outset, me and my delegates from Bangladesh are congratulating you on your silver jubilee. Many, many happy returns of that day, SGG. As I was listening to Shekhar, he is very popular in Bangladesh, and everybody called him Shekhar. So, as I was listening to you about the impacts on the lives of the poor, on the lives of the women, right? It seems to me that someone from Bangladesh is speaking. It's almost same, you know. But one paradox is that about the impacts, we have a lot of the studies. But the government is a little bit shy to accept these findings of the study. What about in India? Is like Bangladesh or they are a little bit different?
India, if you see that the microfinance is totally regulated by the Reserve Bank of India. And we are realized about in the government level, it's contributed a very good impact to the ground level, the people income. So government is helpful on that. Some corners sometimes we are also face that challenges from the leader, and also we are overcome it. But if you see that the two incidents we faced, one incident faced 2010 in Andhra Pradesh, and second incident 2019-20 is in Assam. If you see the 2010 incident happened, after that again we have been started microcredit is those states. They are purely protected. No disturbance happened. And second is in Assam is the same thing. So when the Assam newly have been started to the disbursement, repayment is the best on that. So two incidents happened on that. The customer realized about it. Whatever happened that incident, it has been actually badly impacted to them. And they are not getting the money. They are again going to the money lenders. So it is in one time happen, but after that it has been realized to be very good on that. In that sense, not that much in the government level are thinking about this. Point is one point, many of the discussion happen on the interest rate. That's the main issue of that in the government, regulator, political leaders, all are the one issue is an interest rate. Interest rate should be reasonable. It should not be like to have the chance of that the money lenders lending the 10% per month, I am lending 3% is not like to that way to calculate. So calculate on the basis of that, what is this? I ethically believe on that, how much I can be like to lend to these people. And is permit my balance sheet. Accordingly, it will be like to be best way to sustainable on these things. So that is the point. So other things, sometimes it will be country to country, area to area, little bit difference on that, not in a bigger way coming on that against it. In the government policy level discussion, they are called microfinance institution. Reserve Bank of India every quarter called the microfinance associations leaders and then on that. When we are meeting on that, they are specifically ask me microfinance factor. So they are very much supportive on that sense. Thank you.
Thank you very much. There's nothing more that can be said after Dada has spoken the final word. However, he was, while we were talking about digital, he was constantly mentioning, we should not forget the person while we are talking of digital and all the technologies. There's a person behind the digital. So that's something that we should take away. We have covered fair amount of ground today, regulation. Govind raised issue about governance. Bonam talked about the regulatory arbitrage. Vivek talked about the space for newer and newer institutions. Sadaf talked about, apart from the one word that rings deep in my ears is vandalism. So, of the government of which all microfinance institutions have been subject to. So I guess there is a lot that we have consolidated as an inclusive finance sector, and a lot to look forward to as a promise. On this happy note, we should take a break for lunch, while acknowledging that large number of discussions have happened in this particular room about the angst and the promise of microfinance. So that's recognizing Hotel Ashok also for its contribution to the microfinance sector. Thanks a lot. Thank you.
Thank you so much, moderator of the session, for wonderfully conducting and concluding the session. We also thank our distinguished speakers on the dais. Thank you so much. And we also thank everybody present in the audience for making this so interactive. I'm sure we have more to discuss, which we can do during our networking lunch. But before that, may we recognize this moment and present mementos to our members present on the dais. May I request the Principal College of Agriculture Banking, RBI, Pune, to kindly join us on stage. Mr. Vijay Shekhar. Please put your hands together as I welcome Mr. Vijay Shekhar onto the stage to present the memento to the moderator of the session, Professor M.S. Sriram. Can you please put your hands together and as we thank Professor M.S. Sriram for a wonderful session. Thank you so much, sir. We now present mementos to our speakers of the session, presenting a memento to Mr. Chandrasekhar Ghosh. Can we let the energy keep flowing? Presenting a memento to Mr. Chandrasekhar Ghosh. We now present a memento to Dr. Subrata Sarkar. Thank you so much, sir. A shawl and a plaque to Dr. Subrata Sarkar. We also present a memento to Mr. Govind Singh. Thank you so much, sir, for your valuable inputs, presenting a shawl and a plaque to Mr. Govind Singh. Once again, requesting Mr. Vijay Shekhar to kindly present a memento to Mr. Sadaf Sayeed, a shawl and a plaque to Mr. Sadaf Sayeed. Thank you so much, sir. We now present a memento to Mr. Vivek Tiwari. Can we put our hands together as we thank the speakers of the session? We are thanking Mr. Vivek Tiwari for his valuable inputs, a plaque and a shawl. We also present a memento to Mr. Srinivas Bonam. Thank you so much, sir, for your valuable inputs. Ladies and gentlemen, a huge round of applause for all our speakers as we thank them, presenting a plaque and a shawl to Mr. Srinivas Bonam. Doing the honors, Mr. Vijay Shekhar. May I request all the members present on the dais to kindly step forward for a group photograph. We also request Mr. Vijay Shekhar to be part of this group photograph. As we capture this moment, ladies and gentlemen, quickly taking this moment, we're thanking each one of you for participating so well. We now break for lunch. The lunch break is from 1 o'clock to 2 o'clock. We request you all to kindly be inside the hall by 2, sharp 2, requesting you to kindly assemble 5 minutes before that so that we can begin with our technical sessions right on time. Please enjoy your meal in the meantime. Thank you.